An ugly start to a new month and a new quarter. The S&P 500 trading down about 4% in Wednesday afternoon trading. So what does this mean for April? Well, let's get a sense of it. We'll talk to Jaime Desmond. She's COO at Ladenburg Thalmann Asset Management. Welcome, Jaime.
Thank you.
Well, Jaime, before we get to today's market action, how do you explain the rebound that we saw at the end of last month? I mean, was it institutional investors rebalancing their portfolios and therefore purchasing? And if that were the case, what does it mean now that that quarter is at an end and we're starting a new trading month?
Sure. Well, obviously, with the epidemic of the coronavirus, the market has had quite a wild ride here in the month of March. So we're glad to put that month behind us and hopefully spring ahead. Although today, the first day of April, is not quite giving us that bounce we were looking for. What we believe is that the market is very predictive. And so as the higher numbers started to come in with the results of the coronavirus testing and those that were affected, the market really took that to heart. So we are expecting to have some very negative earnings returns reported here over the next couple of weeks. And it seems as if every piece of data, whether it's good news or bad news, it's actually quite hard for us to predict how the market's going to react. For instance, last Thursday, when the unemployment number was released for the first time, showing over 3.25 million people looking for jobs, the estimate was quite a bit lower than that. It was about 1.5 million. And so even with the double coming in, Thursday was a positive day for the market. So I wish that I could say that I have the crystal ball and that I know whether today is going to be an up day or a down day. But what I can say is that we do expect this volatility to continue in this trading range, probably for the month of April.
Well, Jaime, President Trump's comments yesterday after the market closed, warning about a rough 2 weeks ahead, seemed to unsettle investors. Do you foresee then a rough 2 weeks for the stock market? You were talking about how some of the behavior is rather predictive.
We do anticipate, in line with what President Trump said, that over the next 2 weeks is when we are going to, within the United States, probably peak. So the numbers that we're going to see reported every single day, we crossed over 877,000 people as of this morning affected globally. We expect that that peak is going to occur in the United States, hopefully over the next 2 weeks. And then similar to the trajectory that China and Italy, as of yesterday, just reporting, they've flattened their curve and they're on hopefully the down side of the negativity of the virus, that hopefully we can expect that in late April as well. So I think in conjunction with the quarter ending and obviously January and February were great months for the market. So the overall earnings reports and GDP numbers and such, they will average those 3 months, January, February, and March. But obviously, in the short-term memory for all investors, March was quite a volatile month.
All right. And how should investors be positioned at this point?
We actually went into this year actually in more of a neutral position, whereas previously last year we were overweight equities in our balanced portfolios. So if investors have not yet taken some more cash off the table, we did raise some cash in early March as the volatility continued. As an example, our 60-40 portfolio is actually now 42% equity. And so down by at least a 20% shift there. A little of that is market action, but a lot of that was us going into this year, trying to take some of our earned chips off the table, as well as raising additional cash. So we think investors should maintain a neutral position through this next month or so of volatility. And when we start to see reports of the flattening of the curve, we think that that will put people back to work and therefore a good time to hopefully get in near the bottom and look for some great potential. The S&P is selling at a 5% discount, and in February it was at a 25% premium. So there certainly is a buying opportunity for stocks in the next couple of weeks here.
Our thanks to Jaime Desmond, COO at Ladenburg Thalmann Asset Management. I'm Fred Katayama, and this is Reuters.